right, hello everyone, and welcome to the stream, and of course, welcome to the day of memes, because that seems to be where we're at. Of course, Roaring Kitty basically coming out and telling everyone his position, sharing with us his position over the weekend, and that leading into this massive squeeze that we're seeing across everything, and it's that secondary squeeze that we've been discussing. So if you were lucky enough to get in around $20, $23, some of the levels we've discussed, and you've been sitting there with what I would like to consider a gamble, because that's pretty much what it is, then you might be very, very happy today. Did anyone get on board the second dip? Let's find out in the chat. I hope you had a great weekend. So let's find out, anyone on this thing, or are most people just looking at the S&P and other things? What's your favorite instrument of the week? Let us know right now, and I'll see you in just a moment. All right. So it feels like it's been ages, but it's really only been a week since we've done one of these live streams. But we need to talk about quite a few things. As always, I'd like to say a big shout out to KNL, TX Redman, Charles, Chris, Joe, Andy, and many, many others that joined us here early. If you do enjoy the stream, then make sure to give it a thumbs up. And of course, we very much appreciate that. So coming up in today's show, we'll be covering off on stocks, commodities, cryptos, and I guess meme stocks today. We'll be going through some of the key levels that we're looking at for the week ahead. We'll be talking about that massive resurgence in spike that came through on Friday. Of course, the market's coming off that 5,200 zone that we liked, and we liked it a lot, but we didn't probably think it was going to go 100 points up in a day. But anyway, that's what happens. And now we find ourselves at what we call the call resistance. So basically, the last level, really, a bear could pressure this thing down if they're going to. And of course, we use bear as an analogy, basically means sellers. That would pressure this kind of point. And if we don't do that, then it looks like we're in a pretty nice upward tick to 5,400. All right, so let's get out. A few people in here in GameStop, few people in a couple of other positions, and they're looking for, I love the world of finance. Absolutely. GME to the moon. Yeah, Torvia, I know you were picking that $20. And Quillal says here, love the world of finance. Absolutely, Quillal. Thank you for the support over the years as well. So, yeah, this is all stuff here. 5 shares at $21. It's okay. Be in it. If you're in it to win it, then that's all good. Yeah, so what do I think about this? I guess I'll give my first synopsis. As I always say with meme stocks, if you're in it early, then you win. Then if it crashes, there's usually a secondary resurgence. And of course, I feel like that's what we're in today. Now, how high can it go? Well, generally speaking, a good rule of thumb would be to go for a 61 to 71.8 fib. 61.8 to 75 fib. And I'll just start here because, of course, it's the hotness. That's what everyone's talking about. So that's going to be pressuring in on that $50 to 53. Now, I know that pre-market before, it was actually sitting at these levels already. So if you look at not just the post-market, but you look at the pre-market, this is the kind of area that I would expect it to potentially rally into. And it's mostly a hype rally. I would be very, very careful from these. A lot of people are saying, Tom, it's more shorted than 2021, man. You know, this is the best position. You're going to become a bazillionaire. Just remember, I think most people are aware, just like always, that the street will ultimately win this battle. So it's going to be in it until the buck stops. And last time was very, very quick. This time around might be more significant because, of course, releasing his positions as he did, being in there, $200 million factor or something like that in terms of the calls, that is a fairly powerful kind of storyline that can be run for quite a few days. It also, of course, activates many other positions. And one of those that I thought was less risky was probably Sun Power. And the reason I guess SPWR is less risky in my book was because it came down to $2.80. And actually, it was in a sector, which is solar, that, of course, has been improving. It's had that government spending improvement. It's also got government kind of, what can you say, support through the tariffs, those types of things. So I think, in many ways, we are at a point where there will be a few of these runs. I wouldn't be surprised if we get a lot of them that kind of float around. And I think it's all about your risk reward. Just remember that these are not easily predictable. Anyway, let's see what everyone else thinks in the chat. I guess it went exactly the way I thought it would, which is a secondary bounce. And whether it can continue to go up from here now, well, you've heard what I think in terms of pricing. I'm always a little bit skeptical. I always say descale your position and be in it to win it, sure, but be with the risk. Fahrenheit says, ha ha ha, you can tell someone disposition whether they have taken recent losses. Ahem, Tom. You think I took losses, man? Nah, bro. Man, you be very mistaken. I am super bullish. I think you realize that I have had some massive positions in metals and utilities, and yeah, it's all right. It's all good. Nah. US 500, why I'm saying in terms of the way that it rallied is because for a lot of people, they want to have, you always want to be making, pretty good calls, yeah, on the markets. So when you look at a market, and we'll go through the US 500 first, if you have a position in here that's long, let's say, then generally speaking, if it goes so quickly, then it kind of, breaks down, the next couple of sessions of potential movement in terms of being easier to call. So if you're in the content creation machine, you're creating content around this type of chart, then of course, if it does go slower, it's better because the way that you then talk about the next level makes more sense. So like my thought process was always going to be here, sits around for a little bit, breaks through, comes up to here, potentially finds a short, bounces off this level here, hopefully moves towards the upside. That's the general thought process I had. So yeah, I think it's very, very important that you always think about that. But in terms of, my long positions or the long kind of options concepts that I have, of course, it would be all the ones I usually go with, which is property, utilities, gold, metals, copper, crypto, a little bit of Bitcoin, that kind of thing. Oil, I'm thinking it's very political. So to me, it's not really my number one shifter. And then, of course, AI stocks, the three pillars, NVIDIA, Microsoft, and of course, Google. We love those stocks, guys. You got to love those stocks. Now, at the moment, if you want to talk about positionals in terms of, riskier positionals, of course, solar's on the cards right now with a very nice setup we'll look at later on in terms of the overall position buy. But yeah, you've got to always think, when you're creating content or you're doing anything and you're trading or you're investing or anything, and we cover 30 plus markets per day, hopefully you guys enjoy that. Also 500 people here. Thank you very much, guys. I assume you enjoy the content that we produce because we do 500, 30 charts per day, 30 kind of positions. Then there are going to be ones that are exciting, ones that aren't. So if you ask me right now, am I excited about gold's current price? Not really, because I think it's in that kind of pullback phase that allows us to get into some excellent positions. Am I excited about Chinese stocks? Well, they're obviously down, yeah. But they're coming back to levels that I think makes a lot of sense, and we've discussed that. So certain charts are exciting, certain ones aren't, and that's how it's always going to be. So how do I see US 500? Well, we've hit into the level which I've talked about as a possibility of call resistance or a possibility of a bear level. And the reason why I say this is because, of course, we do know we have a lot of calls here. We do know that there's a ton expiring today in 0 DTEs. So it may be better for, let's say, the street and the riders to keep it underneath. And because of this aggressive movement up, which is quite a V-shape style movement, then there's a chance that we might get this type of thing. And I feel like this is the most likely scenario. A bounce a little bit higher here, come into that most traded zone, which sits around 53.10 maybe, and then find some sell-off weakness after that strength, pull back down to maybe something like this. And you can see I've got it here as a possibility of a bull level. If you guys are ever interested in some of these charts, I've been posting them a bit to our X account as well, so you can check it out there. And this is, a very important kind of setup possibility. Now, if the markets did end up shorting off this area down here and they came underneath this bull level that I've highlighted, I'd start to say, okay, well, it seems more likely the next level as a trader anyway is 49.55,000. But if you've been watching the channel for, months, years, whatever, you would know that in general, I would stay optimistic on this market. With everything I'm seeing running around, I think that no central bank, that no government, that nobody in general is doing anything to combat, number one, inflation, and number two, trying to stop this market from going up. They're not taking the hard steps that force a recession. And you might say, well, what does that mean? Well, it means that we're in a curse effectively. And that means that basically markets are in a rally that's built on AI infrastructure. And you've got to look for the signs. IPOs. Where are the IPOs, guys? Where are the IPOs? Well, it turns out, I was reading this before, that AI is the new NFT. So the crypto bros in the NFT world have moved over to AI stuff, and they're coming out with all sorts of weird AI things. And of course, that's pseudo kind of startups of businesses. But what we're really looking for is Wall Street to get some nice new AI IPOs coming out. So that'll be a big one here. So that's a big one. Charles says here, got to have inflation to pay debt. A very interesting concept, Charles. Absolutely. You're starting to think about the inflation play to inflate away the debt concept, which is, a well written about historical thing that has happened. So yeah, it's a very interesting concept, that one. Maybe one day we'll go through it on the show. But I do tend to think that is there. And of course, reflating or inflating away the debt has been a common tactic used and often forgotten by the books. Forgotten by modern theory, but not forgotten by historical standards. What does oil look like? Sure, we'll check out that in a moment. Starman says here, I have a position in Enphase, a pretty good stock. Obviously, one of my favorites. Let's quickly load that up from that particular sector, which is solar. We'll have a quick look here at Enphase. So again, what I think of the S&P 500 today, I think it's at resistance. I think you've got to be more careful at this level. However, it depends on your time frame. If you're bull and you're looking at multiple weeks, multiple months, then of course I still would remain bullish. There's no signs of weakness. We've talked about this in the show, yeah? No signs of weakness that terrify you, all right? Now, in terms of short-term weakness today, it's possible. And that's why I think it's important. So if you have a look here at Enphase and you check out what's going on, you'll notice that it could be the signs of what they call an inverse head and shoulders. And basically the markets are, possibly right shouldering here. They are looking relatively strong for Enphase, but it hasn't broken out into that next level breakout yet. So that's going to be that big point of 140 plus. So do I like this stock? Yeah, I think it's pretty good. It's riskier than a standard Google or an Amazon or a Microsoft or anything like that because, of course, it's a more rando stock in terms of the movements. But you can see base forming. Volume's been pretty good. Interesting one. Sven says here's greetings from Belgium. Welcome. Thank you very much for watching. I watch every video, always objective. Thanks, Tom. Thank you very much. I very much appreciate that. Greetings from Australia to Belgium and everywhere else around the world, guys. So this is always important here to check it out. Too much sensitivity around elections to combat inflation for now just seem to be postponed and keeping things where they are. I think we just don't want to get worse, pretty much. Scott around trade says, thank you, Tom. No worries, man. My IPO space is RKLB Patience. Okay, Sven, cool. Deb says here, smash that like button and show some support to Tom. Thank you very much, Deb. Appreciate it. Yes, some good stuff coming in here. You guys are pretty smart. I got to give it to you. You got some good ideas here and some. You've been doing some good research. Mish said here, I hadn't considered inflation developing debt. Yes, but it's because it's been removed, guys. It actually used to be in economics books. It's gone. It's got. I think it's partially erased. Hey, I'm not saying that I've read every book, but let's just say when I was at university, they weren't talking about that. So yeah, that was not there. Rocket Man says, "Hey man, what do you think about quantum computing companies?" I can't say I know that much about them, Rocket Man, in terms of knowing they're profitable. If you were to say what drives this AI revolution trade right now, I've actually said this a few times, and I don't have the chart on me, but basically in the 90s, the 1990s, and you guys tell me if you want to hear this. If you don't, let me know. So if you want more charts, tell me charts. If you want me to tell you what I think about the current status of this market in terms of my opinion, then say opinion. You guys can choose. You choose the narrative of the day. So 1990s, basically, we had Intel and we had Cisco, yeah? And they were both infrastructure companies. Basically, you made the chips, you made the weird security stuff, and who knows? I don't even know what Cisco did half the time, but security and I actually don't even know what they did. But anyway, we'll call it infrastructure. And this was effectively the infrastructure play. And what happened was those stocks became so overvalued that they went into epic crashes. And the reason why they became so overvalued is because they were kind of like the leaders of their day. Intel with the chips, Cisco with everything to do with security. And effectively, what occurred was they created a super bubble. And that super bubble caused an epic crash, of course. But why did we end up getting no real recovery? If you look at a Cisco chart, the Intel chart, they suck. And the main reason they suck is because competition. So competition was, a big component of this. This is at least my opinion. And what happened was new companies came out and ate them and ate basically their lunch and started to destroy them by creating more far superior products. And that's why they didn't recover as well. And that's why there was like, when you get a massive crash in any industry and you're early adopting an industry, that always tends to happen. So right now, you could argue that a lot of semiconductors and NVIDIA are the infrastructure plays. Now, does that mean NVIDIA is a bad company? Well, history will end up telling you. Of course, it's old company. It's been around for a long time, but it's arguably the infrastructure number one king running this market at the moment. So do I think it's going to become the largest stock in the world? Yes. Do I think that it's going to get in a super bubble? Yeah, yes, I do. And do I think that it's going to get wild out there over the next year? I really do feel like it's going to. Luca Schnetler, becoming a new member. Thank you very much. I probably butchered your name, but thank you for the support. Appreciate it here. They only teach things in school to keep people workers. Real education happens when you leave school. In many ways, that is true. And in particular, you really don't learn much about, let's say, compound interest or the idea of a lot of different concepts to do with getting into the reoccurring income kind of side hustle kind of process, or financially free, or whatever you want to call it. All right. So it's an interesting process. Let's just assume that we're in something like the 1990s, a new technology. I think we would all agree here, and you guys chose, by the way. Looks like we've got charts, opinions, a bit of a mixture. So we're just going to go both. It looks like we're in a period where I believe we're in probably the biggest thing since the train, since the locomotive. Yeah. AI is massive. It's bigger than the internet, in my opinion. It's going to change the world even more than the internet did. And it takes a long time. So I just think I want to just tell you guys this. I've done a lot of research into it. And what this means is we always make the same mistakes. And it's very important that each and every one of you guys that watches this channel, comes to these shows, and invest your time, which is a very important asset, into hopefully gaining some extra education. Understand this. If you've missed what this AI run's doing right now, don't get me wrong. I think it's going to go further. I think it's going to become more wild. I think it's going to go into a super bubble. But hear me out. It takes a while to bring new technology to the front. And you could argue that ChatGPT, even though AI has run before, let's say AI is 6 years old, 7 years old in terms of an investment process. It's not matured. It's not here yet. And there will be a lot of dead companies and a lot of new ones over the next couple of years. So I feel like, you never should come from a position of FOMO in markets. And as I've probably shown you guys, and as we've seen this year, there are markets that have done better than AI. Metals markets, some of those have done better than AI. Crypto's obviously done very, very nicely as well. And we've had things like utilities actually outperform many of the markets recently as well. So come from this level of abundance, always understand there is another opportunity. And at least I'm fairly confident that we're going to make the same mistakes we always do, and that there will be cheaper prices on the horizon for AI stocks. And more importantly, very interesting, exciting companies on the future horizon. So for anyone that's feeling real doom and gloom on the world, just remember, if we do have a recession, let's say that there is a recession in a few years, and I truly believe there will be, and it's going to be kind of nasty, yeah? Inverted yield curve, these other things. You don't have to look at it negatively. You could look at it as when the US, when the UK, when Western democracies, and I will say this because I live in a Western democracy as well, when they do the best? They do the best in times of toughness. Why? Because amazing minds, many of you out there right now, and this is just my opinion, but I'm going to say it anyway, amazing minds come together to create amazing companies and amazingly fantastic, innovative ideas and software and concepts. And I truly believe that is going to happen again. And unfortunately, through toughness, when we become lazy as a society, and that means we kind of sit there with opulence and, I don't know, drive around eating turkey burgers and stuff, then when that happens, we have to get a kick in the ass. And unfortunately, that's the way the system kind of works. And when we get that kick in the ass, amazing things do happen. So we could look at it negatively or we could look at it positively. I think there's going to be new Googles, new Apples, new all sorts of things that are coming on the horizon. And as long as you keep the mindset of abundance, which has been very helpful to me, it will find new opportunities and you will get them. And just remember, there's always new opportunity. GameStop, last week you said to someone, "Oh, you're going to buy GameStop, bro?" They say, "Get the out. I don't want to talk to you. You told me to buy it at $60. But if you'd gone and said, well, you know what? I know that every single time these stupid meme stocks go off, they usually have a secondary run, and there's a good chance that Roaring Kitty, called him Hello Kitty, Roaring Kitty, basically is going to post again at some point, maybe not just like memes of dancing things, then there's a good chance that it might bounce again. And as long as you understood it was a gamble, and as long as you used, the right processes behind it, you might be sitting there today saying, that's right, I make 100x. I made 100%. That's right. Or I made 100x on some crazy option I wrote because you came from that standard temperament mindset. I say this to every person. I know I'm on the same chart here, but I want to say it to you guys because I think it's so important. The number one thing that will make you a good trader, a good investor, good at life, in general, good at anything, is temperament. Why? Because all the greatest investors are kind of really boring. Have you noticed that? They're all really boring. Now, they live their lives like that, yeah? They embrace the temperament of being a flatline. If you had like one of those heartbeat monitors, it'd be like flatline and all over the place. There'd be nothing. There's no pulse, guys. There's no pulse. But if you can get your mindset into that, it is powerful. At least that's my opinion. Anyway, you can agree, disagree, see what you guys think. Let's get through some charts here. Adam says, I'm not claiming there won't be a recession, just saying waiting is not a strategy. Correct. So Adam gets a good point. Understanding the correct stuff is a strategy. So if you're sitting there and it's like a 60x on AI and you're saying, well, I can't do it. I can't do it. Let's just say mentally you can't do it. Remember, Adam, there are some people, and I don't blame them, that cannot take a position that is high multiple position. Why? Because they don't sleep well. They can't handle it. They get stressed. They get confused. And then it goes up 10% and they close the position because they get scared. If you're going to have, big, let's say great temperament, great ability to hold a position, you got to believe in it. I talk a lot about moat. Why do I buy high moat companies, things like Microsoft, Google, NVIDIA in general? Because at the moment, no one can touch them. Why? Google control the internet in many ways. They control our search. They control some of those powerful websites on the internet. They control data. Why do I like Microsoft? Because they control our computers. They control the software that we use pretty much across the board. And they control a lot of security as well. And they can therefore get a lot of government contracts from it. And they have a massive moat that no one can touch. So it's arguably one of the biggest moats in all of the business. And then, of course, why do I like NVIDIA? At the moment, number one. Do I think NVIDIA has the biggest moat? No. But it's number one on the infrastructure play right now. And obviously, that is important. So there you go. Joe Lovin says here, 10 of the last 13 solar eclipses have led to a 44% increase in the market over those years. Hey. 10 of the last 13. I must admit, I understand that's there. Like people always say to me, man, you like reading tea leaves and stuff. And I'm like, no, dude, you're not reading tea leaves. You're reading flow. You're reading positions. That's what price action technical analysis is. You're reading the actual market psychology of what's going on. People say it's bulls and bears. I don't care. That's an analogy. Some guy on the internet today got into me, said bulls and bears don't exist. I said, who cares, man? It's an analogy. You're reading the flow of the market based on options, based on people's decisions, based on funds coming in and out, based on structure, based on where the hell are they? Where is the structure actually forming? How are they building a position? Understand their positions, then trade to those positions. Equilibrium to equilibrium. Who cares which other way it is? So, but yeah, when I always hear these solar things, I must admit, I can't wrap my head around it. What I mean by that is I just like, is that a stat that is coincidence or is that a stat that actually is valid? You know what I mean? I can't run it enough times to figure out whether it gives you edge or not. Anyway, regardless, let's go through some more trade stuff. That is a good one. Thank you very much. And it's cool. 10 of 13. I tell you what, the stat is really good there. Very true, says Stacey F. Appreciate it. Thank you very much. Tom, I feel it's so hard to tell where we are in a cycle. of the market. So much looks like late cycle things like energy, healthcare, real estate, utilities. Yet we're still going. Whoa, 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 Scott. This is a mindset of not understanding time. Okay. If you say late cycle, does that mean that you fall apart in one day? No. Okay. I've noticed that every single person that first finds our channel has really bad time thought processes. They think something has to happen on their own mindset time frame. Late cycle is between 1 and 3 years long, Scott. 1 and 3 years long. Let's just say we entered late cycle basically this year, late October last year, maybe. It's very long. It takes time. Cycle processes, business processes, economic processes take ages. They don't just go, oh, it's not a meme stock flying all over the place like GameStop today and all the others. It's not 2 days away. It takes time. People are lazy. They do not understand that it takes time. It takes a while. And because they can't do that, and I know I'm preaching here, but I'm getting a bit crazy on this, because it's so important that people have absolutely no attention span on these markets. I can't believe it. People expect like 30% in 2 days. Not saying you do, Scott, but you know what I mean? Like it's expected that it just like dumps over straight away. Late cycle takes years, man. Years. Douglas says here, Google, Microsoft, Amazon will just buy up the next big thing. They are sitting on billions. It's absolutely possible that that is the way it'll be. Regardless, it still is going to be an exciting time. And I think you'll find that some people will want to hold their own businesses. Okay. Anyway, I've got IWM here on the chart. So let's do a little bit of charting here. And what I want to mention is it broke through here the 2090 zone. So why that's so important is because this 2090 zone here, John says here, GameStop was not a gamble for the believers. We have been buying and holding for years now. Okay. That's good, dude. Well, I'm glad for you. But you do rely on, basically people like Roaring Kitty to come back and post. It's very important. But I hope, John, that you make $3 million, sir. $3 million. I want you to make $3 million. All right. I just want you to also make the $3 million and hopefully collect a bit of it. It's very, very important here that you do it. Now, I know you're using caps, so you obviously don't believe me. But look, I said it years ago. It rallied. I kind of called the drop for AMC in particular because that actual chart made sense. I called, all those other space cowboy crap stocks that were coming out really, really bad for what they were. And the reason I do that is because I don't want you guys to lose your money, hardcore losing money. And you've got to realize you might not think it's a gamble. You might think it's a movement, but ultimately people are greedy and Wall Street is nasty and they will find ways of taking your coin. Okay. I'm just telling you this. It's just it's the way I see it. You might not agree, but it's really important to do it. I just want you to make sure that you are protected and you don't go through those emotional highs and lows. And look, you've held it, man, and you've believed and you've come from your abundance mindset and that's the stock you love and it's worked out for you this way. Good. But what are you going to do now? Do you have a plan? Just saying. Facts. I went from 70s on exams to hundreds just from temperament. Ooh. Yeah, you don't want to know what I used to do in exams. I used to think, I guess I don't need to do exams anymore, but I used to think, what is the examiner? Firstly, two things. One, that they're all going to receive around the same responses and they're going to be a little bit boring. So what I would do is I would firstly figure out all of the trick questions and I'd memorize all the trick questions. And they'd always I'd find 20 years worth of history. They'd use the same trick questions on repeat. I just copy all of those. So I just remember all of them. So I already knew what's going to be on the exam. 70% of that crap was all trick questions that they found. They rinsed, recycled, and repeated. Second thing I did, draw a smiley face on the exam. Always worked. Not bad. Old smiley face, little smiley face, They're like, what the fuck? Why is there a smiley face? and you could just tell the person probably doing it. They're right marking the exam. And they're like, oh, this little prick. And then they just, a little bit extra. You got to do that. Thank you, Tom. That speech just might have put Tony Robbins out of business. You're amazing. Oh, I don't know. I've actually never watched Tony Robbins, but I'm sure he has many things to say. Ukraine disrupted oil last night. Oil will see an increase in the future for sure. I will check that out in a second for sure. There, try saying that to Buffett. What, that his temperament is like beast mode, and he always, or that he's boring. He'd probably agree with both, to be honest. He's chill, man. He's the chill of chill. Munger was chill too. They were chill in the middle. So is Druckenmiller. They're all the same. They're very beast mode from that point. Please, some views on Chinese charts. Please, outlook after today's bounce. Sure. Let's have a quick look at HSI. It's a good time for us to check that out because obviously it's a market that excuse me. Oh, my goodness. There we go. All right. Yeah, I like the bounce here. There are two main levels that I've been looking at. And so down around here at 17.6 and around this 18 2 level. Now, this is a good bounce, but you'll notice it stops a little bit short. So we have to go down into the internals to see. Now, it has shown signs of exhaustion, which is good. I do think we're kind of playing a little bit dicily with this supply. So therefore, is it a good bounce? Yes. Has it shown me enough yet? Unfortunately, not yet. And this is why I often say patience, react, don't predict. It's okay for a positional if you know what positional trading is, and you know how to handle the risks there. But I don't think it's necessarily enough of a sign to say, oh yeah, this thing's absolutely blitzing to the way up. And the reason is because we haven't really broken through this high yet, at least convincingly enough, and that means that we haven't started seeing the plunge protection team adding to their positions. So I'd be a little bit cautious. We will update tomorrow though, based on the close here. So some good stuff there. Tom, seeing any companies do graphene industry? Don't know enough. Make huge tube, but I like your name. Stacy says hit the like all. Thank you very much. Also, thank you to the 700 people joining us. Hope you guys enjoyed my random account there about the economy, but hopefully enjoyed that. That's good. Love this talk, mate. Thanks for your time. No worries, Rocket Man. I wouldn't say gamble young, but learn young through mistakes and eventually get smarter and gambling older. Look, if you're going to take massive risks in terms of especially startup businesses and all those types of things, there's no question in my mind upon someone that is now 36, I would, and that maybe is not that old, but I would say that it's much easier to have a crack, sub 28. If you're going to have a crack, that's actually good here. John says here, thank you, Tim3 Boomer. And he says here, it's been a rough 3 years to have this conviction, especially when people like Tom just chase headlines and don't actually report what's happening within this company. What does that mean, John? Are you talking about GameStop? Oh, I understand. Well, yes, I can't tell you what's going on within the company. I mean, to be honest, the GameStop multiple times went out and kind of screwed you guys by doing massive amounts of stock. Fundraisers, effectively. That was kind of sucked there. Buying and holding while losing money. Okay. All right, let's go through some other stuff here. Tom likes casinos. Not really. I never invested in AMC. They are led by Adam Aaron, not by real leader, the Ryan Cohen. There you go, John. But hey, John, I hope you make $3 million, man. I want you to make $3 million. Absolutely. I hope all you guys make $3 million. Everyone makes $3 million. Thanks for being on this morning, Tom. I feel like I have an edge now. Yeah, a lot of that stuff is very important. Look, it took me ages to realize some of these things. I might just say that temperament's the most important thing for investing and trading, but I truly believe it after really going through the ringer myself. When you go into trading and investing, it's very mentally taxing, especially if you go scalping. My goodness. And anyone out there, traders, investors here, 700 of you guys, almost 800. What you would all feel it. It's taxing. It's taxing. It's taxing. It truly makes you understand yourself more than most things in life because it belts you every time all of your worst attributes come out. And that's why I say temperament is the number one, because if you can control yourself, you will do better in markets. But to control yourself, you have to not, fall too much in the narrative. Like narratives suck. Half the time you'll notice we talk about core PCE coming and I go through it. I'm like, this is a waste of time. Why do I even need to report past this point? It's a waste of time. So we barely talk about it. You might say, well, why are you ignoring it? Because it's a waste of time. It's a narrative. It's a waste of time and I don't want to talk about it. And most people, chase those ones very, very heavily. Now, of course, do I talk about GameStop when it's hot? Of course, why wouldn't I? People come into it. But the ultimate truth to me is you make the most amount of money when you have a belief or you have an inkling that there is a good chance that you will get a secondary push through a catalyst. And that catalyst is generally going to be an upcoming news event, maybe 2 months out, you're buying it, or you're buying it based on you're hearing, somebody's maybe coming back or something like that, plus the price action itself. And the price action will generally show it to you. So I'll just show you this. I'm just going to put this on the chart for a second. And what I mean is that we found out approximately, let's say the general public found out somewhere in here that things were starting to get really crazy in terms of, memes were being posted and people were back. But if you actually look at the price action, we actually nailed this high before that occurred. Now you might say, well, that's happened before, but this high got nailed and you can see the volume started to really increase. So if you had volume scans and you said, okay, I want volume at 300% of previous, 5-day average or something like that scan for me, then you will find most of these before they go, because that 300 or 500% is effectively what you're looking for in GameStop. You're looking for a movement that is starting in the social world because it is social arb. That is what this trade is. It is social arb. Very, very important. Any views on Palantir? Yeah, I think my man Stanley Druckenmiller bought Palantir. Let's have a quick look at PLTR. Let's go through a couple of stocks. We need stocks. I've been ranting for 40 minutes. All right, so let's go over here. We've got nice big support. We've obviously got the Druck, I think, is getting into this. Someone can tell me if I'm wrong there. And in general, we have that pretty nice January, of course, announcement. We have a okay earnings, it looks like. Market obviously hated on it and it pulled down. Now, this is not my favorite stock at the moment, but when you look at it on the price action, you could say, well, we had a beautiful base, we had big volume that came off of good earnings, and it's in a generalized upward trend. Now, there are some signs of weakness here. This sell is obviously not ideal. This would be a better buy at around 1650 or this gap close kind of area. I would like it here. Okay. That's what I would like. Now, I don't love this stock, nor do I really care about being in any particular stock, because other than the 3 pillars, I don't love anything. So I'm just going to be like, whatever. It's all the same to me. So I would probably wait for the price I want. But it's not the worst price right now. Not the worst price. It is a support. I don't see anything that's in my systems to tell me to buy it. But yeah, it is a support. Let's go to another one. Let's go to Hood. A few people asked about Hood. Now, this is something I've been tracking for a couple of weeks, and I have been bullish on it. Now, I think today's like today are good for Hood. GameStop, weird other stocks that are going well. That brings people into trading and investing, and ultimately, people benefit. Hood will benefit from that because, of course, in general speaking, they get more users. And then if they get more users might sign up for their cards and there are other cash products and there are other things that they've got right now. And I think the price action shows that. So up 4% doesn't surprise me. It's no quality GameStop in terms of 60-something% right now. But I do actually have a question for you guys. Where's GameStop going to close today? Give me the price. What do you think? Best guess gets a shout out. I've already done it on Twitter X. Let's see what you guys think in the chat, and I'll read it later and see if anyone gets really close. So Hood over here, you'll notice, nice big bounce, big volumes, loving the base. It's got all my IPOs rules that I've always said no one else listens to all the time. When an IPO happens, if you're in pre-IPO, smiley face, this is the rules of IPOs in America. And I find it funny that, well, clearly we don't have much penetration because it keeps working like this. So pre-IPO smiley face, you sell within the first week. Okay, you're a smiley face. You bail for 18 months and you're smiley face. And then you consider buying it then. Okay. And you can be smiley face. And if you look at most US tech stocks, this works pretty well. Now, is that a trading system? Maybe it is. But I'll tell you what, it has worked ever since the dawn of Twitter and Facebook and everything I recognize. And I actually recognized it back then. And it is not really very often failed. Generally pre-IPO, very good. Selling into the first week, extremely good. Leaving it for 18 months, extremely good. Or even shorting it for 18 months, pretty good as well. And then smiley face on the bottom. So do I think that Hood has turned the corner? Yes. Do I think price action dictated that? Yeah, I do. I do. It's all about the smiley face trademark. That's right, smiley face. We need smiley faces all around. 20-year rates, how low once the Fed pivot? Well, that's a good question. I don't know. That would be a total guess. Hey, Tom, if you could get, what's your analysis of XPD USD Palladium? I have a look and I only load up Palladium because it's right down in these lows. Now, I've thought for a little while that this should be getting a bounce, but it's that one. Look, if you want my metals list, it's copper, it's nickel, it's zinc, it's aluminum for Americans, I guess. It's these things. Bugger. I'm too loud, guys. Woken up my son. So anyway, we've got here those types of metals. Yeah, that's the ones you look at. Notice I left out iron ore, even though it's a massive one. I don't think that's that exciting, but I do think these other metals are quite exciting. Palladium's not that exciting, but it does have that beautiful inverse head and shoulders over here on the middle side. I also liked how it was finding support. This is nasty, so it could be the final white. So I'll be watching it, but I can't tell you I absolutely know that thing's buying up. Look at the volumes coming through it. But yeah, it's not exceptional right now. It's a bit risky at this position, but it's there. And I don't mind it. 20-year rate guess is so difficult. NEO looks like it's about to run. Can you check out NEO? Is it part of the IWM? I don't even know where NEO is. I guess it would be. Yeah, it looks pretty solid, actually. And, I'm not usually a fan of this stock. Maybe it's the best I've ever seen. I've never, ever once come in here and said it looks good at all. Never. I've always said it's a piece of crap. Now, is it not a piece of crap anymore? Is it for the first time on this stream not a piece of crap? No, it's been all right here as well. If I was looking at the charts, I think we also liked it there for a little bit as a trade. But generally speaking, it's pretty bad. I think it still has to break my 614 level. Yeah, I think it still has to break that. A bit early for this one still. C3 and Hood Rally, C3AI, whatever it is. C3AI, is that it? C3.ai. What is this stock? I actually don't own this. It's just AI, this one here. Yeah, I think it's this one here. Yeah. Oh, okay. This is not doing as well as I thought it would be. I thought this thing was doing better. Haven't looked at it for a while. I can't tell you. It doesn't have the type of setup I would usually use. Interesting. I'm only 24, so don't have much experience. But in election years, do they let a recession happen before the election? Well, generally, you would never want to do that, Rocket Man. It's unlikely that you would do that. Unlikely. Hey, Inf. Always love to have you here. Medium rare steak. A nice way. Actually, how do you guys like your steak? I need to know. I need to know how you like your steak right now. Give it to me. Let's see what the FXE community, how do you like your steaks? And I'll say this. My dad's a beef farmer. I've had good steaks all my life. I've been to Japan. Honestly, they do have exceptional steaks there. Actually, all our cattle go to Japan, to be honest. But that being said, in the US, I did have some of the best steaks I've ever had in my life. It was pretty good. Anyway, that was interesting. Medium rare steak says, "Hi Tom, long time listener, first time watching the live stream. What are your thoughts on rate cuts this year and Wall Street's actual counting on it to pump the markets? Number one, rate cut means bad things, means a slowing economy. It's a dumbass technique. Number two, thank you very much for watching for such a long time. And number three, I think that considering the types of processes, if you guys want to look into it, that Freddie Mac, I think it's Freddie Mac, recently is about to get approval to allow you to do double mortgaging. Okay. Now, let's just say that's going to untap a lot of equity for many Americans out there. And unfortunately, generally, now you guys are all smart. We got 700, 800 plus smart people, plus 170 something thousand smart people on this channel. You're not going to go and take that debt and go and buy random stuff. But let's just say people are going to be allowed to grab some equity out of their houses pretty hardcore. And I think this is going to create some pretty big booms in the markets. It's something that I've been thinking about putting into a show, but it's fairly dodgy and it's definitely happening. So I don't think that rate cuts are a good thing. I think they're a bad thing. I think that the US is all that you need to watch in terms of rate cutting environment. Obviously, EU zone's probably cutting way before because they've got much weaker economy. And when the US rate cuts, especially if they rate cut and then we uninvert yield, it will be important to watch. Now, for anyone out there, don't expect this. A yield uninversion will not just instantly crash the market. It takes time. And that brings back to that question and answer we had from before. 3 million is too much. I think 300K might fix my house. You need 3 million TX Redman because you need the pool. All right. It's hot over there. They get the pool. Jeff says here, good morning, Tom. Mentality is such a key. Livermore made money in the bucket shops, which limited his losses, but couldn't make money in the exchanges until he got control of his emotions. Yeah, emotional hits are a big deal. Shop. You know what? I need to look at Shop. This stock had been getting smashed, and I noticed it came down pretty hard. So you can see I've got some analysis here. And yes, I have been looking at Shop pretty closely. Looking specifically at $60 and kind of 10 cents. What is it? $60.15. I actually think it's forming base after getting absolutely crippled the other day. So yeah, Shop is certainly on my little horizon here as a real possibility. Hood is a great stock and an awful platform, says Amish Cyborg. Well, I don't use Hood, but I can definitely say that I don't really have a bias on it. I'm just looking at it from a pure technical term. Coinbase setup, please, Tom. Or do we have to? Do we have to look at Coin? This section is sponsored by Coin. No, yeah, I don't mind it actually. It's not too bad. I thought I was going to hate on you for it, but yeah, it's okay. It's not too bad. Here you've got a nice breakout of downward trend line, which we talked about the other day. And we've got the pullback back to this big key level. And obviously we've got Bitcoin, which we'll look at right now, along with Coin, that's starting to really press that 72K. So it's actually coming out of its coil possibly. And you can see here, long leg doji coming off the 20 moving average. Nice, big, bullish kind of market close potentially here today. Got the GameStop going up, which obviously is strong. And this is all leading into the potential of having a nice coil breaking out of 72K and really starting to ramp. Now, I want to get the stake question answered. I think I'm pretty far behind here in some of the chats. So we've got here stake. It looks like most of you guys, or some people have degrees, read it. This person smokes 142 degrees. Now, I'm going to assume you are not in Australia. Because 142 degrees is bloody hot over here. Centigrade. You're in Fahrenheit, so that's good. 142 degrees. Is that inside? Medium. You guys are all mediums. It's mediums everywhere. Medium rare, vegan. Well, then you can have the Beyond Burger in medium. We're going to go with Beyond Burger in medium. Farbusa is wild. likes it the other way around. And oh my goodness. Oh, you need a smiley face. Like my portfolio burned. Oh, I leave the steak on the cow. Fair enough. That's good. Hashim says here, Tom, any comments on when phase two of AI starts? By phase one, I mean SAAS outperforms chips. Yeah, I've been thinking about this. It's a very good, interesting concept. So that's actually coming from a chart the other day that I shared, and basically the stages of a new technology. Hmm. I've been thinking about it. I'm not sure. I think this is an infrastructure play. It takes look, how many what's the number? Someone might know out there. 7 trillion chips to get this thing really off the run. That is a lot. So I do feel like we're in infrastructure stage for quite a few years, frankly. And the reason I say that is because when you have a new technology, you've got to experiment with it. And that's a fun stage, but often plagued with terrible companies and blow ups and all sorts of things going on. So I think that in general, we're probably in infrastructure for a while. And I always think about the internet. I'm not saying there won't be profit to be made in the next stage. I'm just not thinking these companies would necessarily be that good. So it's a great question. I don't actually have that answer yet. I have to think about it more, but I have been thinking about it. How do you best identify the key levels you want crossed when evaluating stocks? Any specific references? Look, Luca, I do have it in my courses. I specifically go through it in the day trading masterclass and advanced masterclass. And I literally break down the 3 setups I use, how I use them, what I'm looking for, bull and bear concepts behind them. Let's say buying and shorting, since people want to not use that concept anymore. It's all analogy anymore. And then I talk about cycles on top of that. So obviously, I cover it in great detail. People find it very good. Well, I think they do. And reviews hopefully say pretty well that way as well from our Google reviews. I mean, people have the Google reviews the way we do it. And yeah, it's really good. So spend a bit of time thinking about that. Obviously, spend a long time learning from very smart people, smarter than myself in terms of billionaires and stuff that I've spoken to. And I've grabbed a little bit of information, kind of like an artist would. An artist always has expert. They've always got some form of thing, person, or I guess you would say, something they look up to, or something that gives them that general go, and then they use that and they build upon it and hopefully create their own style. And that's what I've done in trading as well. Everyone has. Oh, Charles, I don't want to hear that. I do not want to hear that, man. Can AMC piggyback off GME? Great question. So yes, it will ultimately do some piggybacking off. I would suggest that you probably would want to look at the ultimate here, which is how much over, what is the short percentage on this particular stock as well. The reason why I say that is because you'll need to have storylines. So you can't just have what goes last time, therefore this goes. It will need a very strong storyline, especially if GME continues to hold up. Now, I'm not sure actually how this has gotten away with it. I'm actually surprised he posted this because I thought he might get in trouble for it. But anyway, he did, I believe. So what that's going to do is it's probably going to make it a bit longer lasting in terms of there'll be a drop and then up and then a drop and then up, maybe a little bit longer lasting. So yeah, I think you'll need to go and do the analogies on that. To me, I'm a bit risk averse, so I usually would go with something a bit rando as well, like the sun power kind of concept. I wouldn't suggest anything. You've got to make your own decisions. Yeah, risk warning, risk warning. But that's the type of thing I look for. So yeah, I think it will get some form of kind of rally. It's hitting resistance straight away today though. So it depends how long GME can hold up for, to how much this can come in through. Oil dropping taken last week's low. Yeah, so oil's an interesting one. So obviously we saw the OPEC limiting concept. I think the price action is already kind of beating in. Now, I've obviously put question mark short on oil. Now, I explained this. I had buys in here. I even had a sell in here. Slight loss, break even. These are trades, not positions. I did want to build a position, but I didn't get the right sign to build a position, so therefore couldn't do that. I'm very bullish at 72. Quite bullish, in fact, at that price. And I think that's where it suddenly looks like it's going to. And you might say, well, question mark, OPEC just limited supply, blah, et cetera, et cetera. But I think what that's I don't think that necessarily matters. Again, that's a narrative. I'm looking at price action. And the price action, to me, it's a political trade for sure. But, I like 72.20. It's kind of like you like that stock. I like my price. I need the price here. Kevin says GME, BB, and AMC. Or can't we have Sun Power in there as well? I never short, too much to lose. Yeah, that's right. Shorting is way harder, Sven. No way that it's easier. All right, so we've got the market opening, guys. Let's have a look around here. Ding, ding, ding. The market has opened. We've got the main stocks up. NVIDIA in particular is running through. So let's have a look at this one. So no gap down. So obviously no island reversal, something I talked about on the weekend video. If we did get an island reversal down here, it did look kind of negative. And that would, of course, have stopped this upward trend. Now, does that mean I'd short it? No. As I said, I would not short this particular stock because it is the three pillar stock. I like it. If we have the three pillar stock, then we have to believe, and therefore I'm not going to short it. But I'd be looking at it as an overall signpost of potential market weakness. Be interesting to see how it plays today, but no gap down. Now, Meta. I think this is a target for splitting concepts. So this could be a split. What do you guys think? We're going to get Meta split, or has it been announced? I forgot about it. Maybe I've got some kind of I've got Meta brain damage or something. Markets are open. Yeah, we're going through it. Beyond Burger. Yes, Beyond was Meta, by the way, doesn't interest me too much in price action. What do you think? Do you reckon it's a split candidate? Let's have a look at Beyond Meat. So Beyond Meat, very, very low. Now, this is a stock where narrative did not work out. You know why? Because this stock has crappy moat. And I can make a veggie burger and potentially sell it and make money. And because all of these meat companies would claim, or fake meat companies, whatever you want to call them, we're doing stuff, you'd think there's a bit of edge. Well, there wasn't, unfortunately. So, yeah, moat's pretty important here. And Beyond, obviously, hasn't really got the super moat, but price action is probably based off at this point. You can see here it's been struggling for a long time. Yeah, so NVIDIA is interesting. Meta is interesting for the split concepts. NVIDIA split, but Meta. No, I think Meta could split. I think it's a split candidate here. Markets may be in minor June gloom, but still strong. Correct, Biff? I think they are very strong, generally speaking, because of all that other stuff here. Tavern says, now it appears NVIDIA will level off at 1160. It was looking to go higher, yet my analytics haven't updated it. Markets up, showing it at 1160-ish now. We're sitting at 1133, but I guess if you're thinking it's going to 1160 today, then that's cool. You have that predictive power. Generally, I don't go to instant predictive power on these things. I mean, you're basically just going to the right high, I guess. Yeah. From an options perspective, from what we had open the other day, which is here, 1150 makes sense to be the wall of this stock. So somewhere in this area vicinity here. And then, of course, we enter into a big positive gamma situation past that point. So really between this point and this point is normal. If we had gapped down, it would have created a negative gamma environment, which could have squeezed. So we didn't get that. But if it had, I probably think it would have continued. Now, of course, that's not the narrative today. It's not happening. That's not what the price action is doing. Let's have a look at GameStop. Check it out. Let's see the wildness of everything that's going in. So we ended up opening at $40 on the knot. So that's right into this resistance, a psychology number. I wouldn't be surprised at all for it to obviously get a few limit down closures and opens and closures and opens. I tell you what, I haven't seen a limit downs in this stock is interesting because we haven't seen these too often. But imagine the stock market. Do you guys remember 2020? The 7.5% moves on the S&P and NASDAQ in one day, and it was just getting smashed. Did anyone actually trade through the pandemic? That was the wildest thing I've ever seen, except for the GFC. In terms of just there were some. I'm telling you what, people were calling me. We were on phones, and I was talking to some pretty big fund managers, and it was bedlam. I know people will think back on it and they think 2020, oh, it's easy by the dip, baby. But yeah, for people in the know, if you were able to read bonds, believe me, if the Fed didn't bazooka and central banks didn't bazooka the way they did, there was a significant chance of significant falls on that market. Are they going to dump GME down? Are they going to dump? Well, I do think that GME will sell a little bit and then probably find resurgence. And, as I said, to me, to my concepts anyway, I think this is the logical place for it to try to get to. It is a risk. I mean, to have predictive power here, the prediction is already before this event. I mentioned here that I think something's starting to brew because I talked about this $20 to $25 area. And you guys know, if you've been watching the channel, that's what I talked about. The prediction in these social arb trades is to recognize volume increasing at a high percentage and to recognize there is a chance of a secondary pick. So if you notice here, we had volume increasing at a massive percentage wick and it broke through the high after a base. We also had massive injections of volume before the blitz. And that's how you have to look at it. You have to look at it as it is a spread of an idea, the spread of a party, and everyone's getting involved. And this time around, Roaring Kitty controls the party. He controls whether you're going to party or you're going to get gate crashed. Looking like it's dumping. Yeah, well, it just came out of getting held, so you can see there. Yeah, it's halted at the moment, yeah. Well, was halted. 2021 and 2020 was crazy. 2020, I think for that first month, that was pretty wild there. I held through that dip, but obviously, peeing my pants, says Daryl. Yeah, man, Daryl, I think the thing is that people don't understand when you got a lot of coin in the market and you see those types of things. I believe psychologically that you are better off, especially if you've got a long hold portfolio, to not log in, to not look at it because it will impact your day. It will hurt you. And that's what they want. Ultimately, that's what the system wants because you'll end up closing and make mistakes there. Why doesn't the kitty send a message when the market is open? Well, if you set a position and you want a position to make maximum money, you do it while the market's closed. More spread of an idea, more spread of the party, more ability to get hype, more chance of a epic rally and an epic squeeze, which is what you see. So no, you never, ever would share. If you're smart, you never would do it during the market timing. You would always do it on a weekend. Every time. You know what I mean? Every time. Thoughts on Tesla? Seems to be sleeping recently. Maybe need a catalyst. It will need a catalyst. That will be the narrative that gets it out. But my thoughts are still the same. I've said it every day. I think between 170 and 175, someone's buying it. And I think at the moment it is more strong than weak. And yeah, I mean, it obviously we've been looking at the calls, the 180s, the two long legs. Looks like Tesla's getting a little bit of a bid here today. So yeah. Tesla's dead for months. Well, I don't know if I agree with that. I mean, only a month ago it was at 140 and now it's at 180. So, that is $40 up. It's not dead. It's actually wild. It's just that it wilded for only a few days. So it's had some nice moves on it. But yeah, again, I'm a little bit more on the bullish end because it has no good stories. It's basically just like terrible stories on terrible stories. But maybe the stock's already taken a lot of that brunt. And because if it's truly an AI stock, being valued at $575 billion, considering it has the other arm, is that cheap? Is the question you have to ask yourself. Now, I'm not here to say fundamentally whether it's cheap or not. I'm just looking at price action, but it's an interesting concept. That's why I don't like the narrative. The narrative is a waste of time. Next 2 quarters are going to be horrible. Well, look, they dropped the price of the cars here in Australia. I'll admit, I don't own a Tesla anymore. I got rid of mine. Now, why? I just didn't really. I think it's a nice car. It's okay, but yeah, it's not that exciting. Snow mats right around that kind of supporty line, but it looked really sick. I looked at it this morning. I didn't like it that much yet. I sold the Tesla. Yeah, I did. Approved full self-driving in China will be the next catalyst for Tesla, but we already know that. Was driving to Los Angeles. Why? Because we have crap infrastructure in Australia for EVs. It's crap. And I can't take it anyway. See, in Australia, you drive from a kangaroo to a kangaroo, and the kangaroo is really far away, guys. It's like 400 kilometers away. So if I want to go visit the kangaroos and say hello, I can't get there in my Tesla because I run out. And you might say, well, just charge it on the way, Tom. Yeah, you tell that to the Australian government. They're like, what's an EV? Charging station. I know what we'll do. We'll charge you per kilometer you drive in it. That's actually what they tried to do. And by the way, they're trying to do that in Cali now. It's pretty funny. But yeah, you cannot get there. I can't get to the kangaroos in the Tesla. So I needed long range. They didn't have it when I bought it. There was no long range. It was only short range and just doesn't work. Why can't I ride all the kangaroos? Well, that's what I do now. I got rid of the Tesla. We ride kangaroos now. When I was in Melbourne back in March, I drove a Toyota hybrid. That was really nice, super great mileage, and no charging stations needed. But did you drive short range Tesla range car? Thoughts on silver gold? Oh, good point. Let's finish off there. So we'll go with gold. So my points on gold here are still looking for the turn. I'm obviously bullish on gold, still thinking strong, in my opinion. Now, silver actually had a gnarly weekend, weekly close. But yeah, I'm looking for it either above 23.65 to get more bullish on the trading side, or I'm looking for it down to the kind of this level here. At the moment, I am a bit biased towards the bear end. So basically seeing it kind of weaken, even though I'm obviously super biased bull in positioning. But yeah, I think it's still weak on the charts, and I'm looking for more information. And at the moment, I don't have the information. If I was on really small time frame right now, I'd be bullish for the session based on what I see here. So basically, you'd be looking at the kind of up into this price in here. Would I trade it? No, because it's not at one of my key levels. So because of that, I wouldn't bother with it. But yeah, I'm looking for it above 23.65, or I'm looking for it down here, and we'll reevaluate it there. Gold or GDX? GDX is obviously stocks. To me, they are going to be undervalued compared to gold, in my opinion. That's why they're holding fairly well. Silver, interesting one. I just want to show you silver on the chart so you guys can see it. Weekly close was really nasty, and it suggests there's more selling to come, but we'll have to find out. So I think this thing will go like $50 personally in the future, long term away. This is a nasty candle. Obviously, it made a new lower low. Kind of suggests that's a real possibility. Watched car news where Toyota was doing well, focusing on hybrids rather than full electric vehicles. Yeah, they actually really believe in that concept. That's what they're going in on. Look, I'm not here to discuss whether EVs are better than non EVs or anything. I don't think anything, I don't really think most of them are a solution, frankly. But I think EVs are very smooth, great torque, cyber feeling, pretty cool. But they don't have that feeling that you get from a cool engine. You know what I mean? I do like a cool engine. Don't forget to hit that like button. Thank you very much. If you were to pick a miner, what would it be your pick? No ETF. Oh, sick. AA. But generally speaking, I would go with an idea. And miners are very, very, very as much a spec. So you've got to go with an idea, pick your metals, and then focus those metals rather than focusing any one particular company. Because if you know mining stocks, yeah, there's a bunch of dudes in helicopter floating around having a chat, and sometimes it's random stuff happens. Why does Reddit stock have such big swings, 5% almost daily? I've never really looked at Reddit stock. Let's have a quick look to finish up. Reddit here. Is this Reddit stock, Reddit Inc.? Well, firstly, it's an IPO, so I hate it. And I think it will not do well over the next 18 months. Why does it have 5% movements per day? Because it's relatively new in the markets, and therefore it's going to have a lot of repricing swings. Very impossible. I think it's almost impossible to trade technically. on a chart like this, mostly just guessing and using, maybe you can use the options market a little bit to figure out what's going on. But you know what I do. If it's an IPO and it's tech related, I hate it for 18 months. There you go. US 2K, I did that before. I actually think the US 2K is looking really nice. It is actually coming into a period of 3 month seasonality strength, which is probably what I'll put in the next video. It is underneath this point, but it's done what I would usually expect with a market that's on the rebound. So I don't know, looks pretty good. We'll see what US 500 really does today. It is at res. So just a reminder, we are right at the resistance. We almost made it to the new high just before. So I expect kind of like this to occur. And that would be the general scenario that I've got right now. I do believe being bullish is usually the best course at the moment over the next year. Most stats point to that. But as a day trader, this is a possibility. This is then the next best possibility underneath there. And if it just ran without you and you didn't get into it on a day trade, who cares? Move on to the next one. Have that abundance mindset. All right, guys, I hope you enjoy. And thank you very much for being a subscriber to the channel. It's always much appreciated. I hope you enjoy these Monday sessions that we do together. I always do. And I appreciate your time. So I hope you have a great time. Now, we did have Luca. Again, thank you very much for becoming a YouTube member and supporting the channel. Much appreciated. And yeah. Is this the Hey George fell out of a helicopter type of mining stuff? I don't know what they're doing in the helicopter, but things happen. Thoughts on Crowd before earnings tomorrow? Oh, good stock. Maybe we need to talk about Crowd. So I do love me some CrowdStrike. So basically, this is a very decent cybersecurity company. Now, unfortunately, it's not cheap anymore. So what are my thoughts? Well, it's getting a bit wild there, wild and woolly recently. I don't probably, sometimes you can get a bit of edge off the charts. It doesn't seem to be giving me much of that. Trend is up. I don't really like what it's been doing recently, though. But it is one of my favorite stocks. And if you look at the earnings, I mean, why would you say it's going to be red? Green, 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 green. Oh my goodness, so many greens. Okay. A lot of greens. So I think it might be green. Now, who said a guess? Yeah, but it's at least based on the previous times we've seen that. Tavern, thank you very much for becoming a new member. Very much appreciate it. Thank you, guys. We'll see you next Monday. And we will see you, of course, at the close for the normal daily show. Thanks for giving me a thumbs up recently, guys, and posting comments down below. I know there's a lot of spam robots. There's not much I can do. I probably delete about 50 a day. But I do appreciate your comments, your likes, your time, everything else. It's much appreciated. And I think we've been putting out some great videos. So I always like the feedback. And most of you usually pretty positive about it. So that's good. And if you have constructive feedback, I'm always interested in how we can improve the show. Bye for now. Have a great day. Good luck in GameStop. Let's finish up by having a quick look at the stock here. And we have, $31, up 36%. But that being said, now that it's begun, I could see it still going up into these prices. So you've got to remember, it is a risk. Please be careful out there and practice risk management whenever you can look at these things. Have a great day. Bye for now. See ya.